How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. Welcome to March. So, according to the poll that we had in the channel, I had gold, AU, and EU, and gold and EU were neck and neck. And by the time the poll ended, EU came out to be the victor. So, you guys asked, you shall receive. So, we're tracking EU for the entire month of March. So, that's our primary focus. That doesn't mean we're not going to be looking at any other pairs that are correlated or inversely correlated for our intermarket analysis. Our primary objective is to focus on what EU is doing and what dollar is doing. Some macro information. So ECB, the European Central Bank, its interest rate is 4.5, and the United States Central Bank, the Fed's, the interest rate is 5.5. So we have an interest rate differential of 1%. So I like that we have an interest rate differential. Market is more likely to move. We got a strong versus weak currency. Now, seasonal tendencies as well. Right now, for March, what the data is showing us is that euro should be bullish. There we go. March bullish. We have a small decline, then a rally higher, and then dollar index is going to rally up and drop down. Doesn't necessarily mean the market's going to follow it to the T, but we want to understand what it should likely give us for this month. It can completely do opposite. Dollar could be bullish, and EU could be completely bearish, but we're going to follow price action and see if we can find a storyline that agrees with the seasonal tendencies. As always, we use our IPTA look back data range liquidity pools. So we look back 20, 40, and 60 days, and we find the highest high and lowest low within each one of those quadrants. You can see the unbroken IPTA ranges have a dollar sign either above or below it because it's unbroken. There's either sell side liquidity below the swing low or buy side liquidity above these swing highs. We also have lows that have been broken already. They can still be influential in price. If price were to tag into it, it could be used as a significant level or quote unquote, putting this in quotations, a level of support we can see as well. Another ideology we have on the chart is March opening price. We always go into the new month looking at the premium and discount territories. We want to see where the ideal buy conditions are happening and ideal sell conditions are happening. It's ideal to find a good buying condition and a discount, and it's great to find an ideal selling condition in a premium. Not every month will you be able to get a discount buy. Sometimes the beginning of the month is the lowest low of the month. We've seen that numerous times, or vice versa. The beginning of the month is the highest high of the month and it continues to sell off. However, we're still going to follow our stance on bullish trend formula or bearish trend formula. Swing high broken, wait for a higher swing low. Swing low broken, wait for a lower swing high. And that's what we'll be using to understand what price is doing. As of right now, some scenarios that we could see unfold, if it is going to continue to be bullish, we could see price break a swing high formation, come down, make a higher swing low, and trend higher. So something along the lines like this. Not perfect in the way I'm drawing it, but just getting a image of what it could do. Another scenario we can have is probably price comes up and breaks a swing high and continues to sell off instead. And then we could potentially go back up again. So we can have a false break on two sides. So it looks to go long, goes back down, another false break, and then runs higher. That's another scenario. Or it breaks up and just continues to sell off for the entire month of March. Another scenario we can see is price can come down and then go up. So it looks like it's going up now, but I never like to rush into the market. I like to see things progress a little more so I can have confirmation and confidence in where the market's going to go. If I just rush in assuming what I think the trend is without any context, I can really hurt myself. I can damage the equity that I've accumulated over the last couple months. And we done well last month with the yen crosses, taking those swing trades. So we want to continue to compound the account. We don't want to go backwards. We want to go forward. If price is going to trend up, simple ideas, and we're going to talk about this as the month progresses. If price action is bullish, those down days, we're going to buy after it. If the price action is bearish and the trend is going to keep going lower, we're going to sell after up days. Very simple ideology, right? The method is always going to be as simple as possible. We don't want any confusion for ourselves as the operator. We want to be able to operate on these markets in the most clean ideas. We don't want to be confused. We want ideas to just flow. Outside of that, of course, I'm going to still be trading the Asian session model with UJ. I'm not changing the pair. I enjoy trading UJ with the Asian session, so we're not going to change that. But when I'm looking for a swing trade for the main pair that I'm trading for the month, I'm looking to see if we're going to get higher highs or higher lows. That's all I'm looking for. That's trading 101. So if we get a break on this swing high, so let's mark out some things. If we get a break on this swing high, that would set me in high alert for bullish momentum coming into the market. Vice versa, if I see a break on a swing low, this is our most recent swing low here. Let's zoom in. Actually, this low. If you have a break on that low, then that could be potential bearish momentum. So I would need to see break, lower swing high. Vice versa, I would need to see break, higher swing low. We also are going to be paying attention to these IFTA levels as well. And we're going to see how they react around it during the kill zones or during any time of day when it hits that. We also want to be buying below the weekly open if we are still confident in the bullish trend for the seasonal. And we want to be selling above the weekly open if it's going against the seasonal tendency being bullish. We want to sell above the weekly open and look for price to go lower. So hopefully this was insightful. We're going to keep it very simple. We don't do a lot. The daily tracking, it's very concise information. Normally the first episode to every single month is a little longer. I have to explain a couple things, some background information, the interest rates, the differential, the seasonal tendencies, small range versus large range. So we can see as well, last month was a small range candle. And according to Larry Williams, what I learned in his book, Long-Term Secrets to Short-Term Trading, the markets work in two natural cycles, large, then small. When a large cycle is in play, odds are a small cycle will come next. And when a small cycle is in play, odds are a large cycle will come in play. You can see for the monthly candle, February, we could see that February was a small range candle. The market was most likely consolidating. It was range bound. We like that because all markets started in consolidation. So moving into this month now, we're going to look to see if we get that expansion, a dynamic price action movement. We want to see it move. We don't want it to consolidate and sit still. We want to see this market start to gear up and ramp towards a new buy side liquidity pool or sell side liquidity on the monthly chart. Right now, we can see we have a monthly swing high up here. That could be an objective. So just mark this off. It's actually our 60-day look back high. Isn't that a coincidence? So that's our 60-day look back high there. We also have a high up here back in July 2023. We have a swing low down here in October 2023 when all markets normally make a pivot in October. And we're going to see how it goes day by day. Do not rush the trend. Take your time, guys. Unless you have all out confidence that the market's really going to be bullish, then hey, you put all your chips on the table and do so. But I personally will give advice to new traders. Take your time to comprehend what the market is doing. And it looks like we did break a swing high here. So we've already started the trend formula. So let's write that down here. So one, we got a swing high broken, which equals what? Bullish momentum. Step two, what do we need next? We need a higher swing low to form. Now that's all we're waiting for now. Now this could either be two things. This is either a false break on buy side liquidity, buy stop raid. Mark out all these swing highs. And that false break will lead price to turn around and go back to sell side liquidity. Or this is a bullish momentum that's coming into play, and the market makers want this pair, right? They want euro to go higher and they want dollar to go lower. Let's take a look at dollar before we end. So let's look at the DXY. So in recent time, at the end of February, we saw price change its trend. We saw it break a swing low. Now, like I said, it's only going to be two things. If you break a swing low, it's either a false break to go back higher, or is it a trend change? Is it bearish momentum after breaking the swing low? We can see after breaking that swing low, it did continue to decline. In recent time, going into March 1st, we see price came up and took out this swing high. Is this a trend change? Is it going to go back bullish? Or is this just a raid on buy side liquidity? above the high. And its price is now going to target swing lows again. All these swing lows down here. So let's mark that off. We can also see that price for the monthly candle already for March created a swing high formation above the open. So if this market is going to sell off, it already made its best premium sell opportunity above the opening price. It sold above the open, and a characteristic to a bearish month is a swing high generally forms above the opening price, and vice versa. Characteristics to a bullish month is that a swing low forms below the monthly opening price. Sometimes you may not get that, and price may just make a subtle move below the open and then move higher. So you can see right now, DXY is trending lower, and we should be looking to see if all the foreign exchange currencies, all the euro dollars, so EU, GU, NU, AU, who else did we miss? I said GU already. All those majors, we should look to see if they're also going to trend higher. Hopefully you found this insightful. Peace.